Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. Record highs were hit in New York and Toronto. Crude continues to do nicely, while silver made an unexpected gain. Ross tells us the markets are looking a lot like they did just before the 2000 dot-com crash. Trends Journal publisher Gerald Celente checks in from historic Kingston, New York. He comments on the economic damage that will be done by vaccine passports, interest rates, inflation, gold, commercial real estate, and whether China will invade Taiwan. InsideTrackTrading.com President Eric Hadik tells us what his work on cycles predicts for crude, natural gas, the U.S. dollar, the stock markets, and Geo-Cosmic events like earthquakes. Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Ross Clark right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at ChartsByRoss. Welcome back to This Week in Money, Ross.
Good times to be with you.
Equity markets again hitting record highs in both New York and Toronto. What's the story there?
The story is the seasonal move seems to be in play. We got the correction in September, early October. Starting to see the really nice turn from an oversold level there. And, we've had the better part of, a week and a half, 2 weeks now. And, there's rotation going on in here. There's no question about that. Because the old leadership, as far as the NASDAQ 100, has really been waning a little, quite a bit. Too much built into expectations of earnings, and companies that are failing to meet or are having some trouble here. With some of the big ones, Snap, Shopify, Facebook, all down 25 to 5%. This week on changes in the retail structure out there. So, you got problems there. But if you take a look around, the energies which had been doing well are continuing to step up. The financials, the JP Morgan's, Goldman Sachs is up into new highs, I think, every day this week. The industrials up around the highs. The transports have had a great month. They'd been selling off since May, bottomed in September, and we're up probably 20% there on the transport index just in this recent move. So rotation going on. This is so reminiscent for me of what we saw around 2000 when you had the big dot-com mania from 95 through the end of 99, first quarter of 2000, and then the NASDAQ 100, those top high flyers, peaked out at the end of the first quarter, but then the movement went over into the value plays, and you had a great second half of the year. You take a look at Toronto was probably the leading index into February of 01 as things came into play, and right now NASDAQ's having trouble getting up to its old highs, but other indices are moving along pretty darn well. So you got to, there's a bull market. There's always a bull market somewhere, and just got to find the ones.
What's going on with crude?
crude had a really good week. We're having what I would call just a nice steady move on the upside here. Closed just over $84 at the end of the week. Quite happy with the way it turned the corner down in the when it broke out in the low 70s. And I don't think there's any trouble here on the upside right now. We'll look for maybe another week or two and see if it starts to see some overbought readings. But right now, there's nothing there that concerning me. The commodity that's really interesting, well, it's the precious metals here. In particular, we hadn't talked about it, but we've been writing about it, that the CRB index, Commodity Research Bureau, basket of commodities, that index, as of September, the relative strength there was up over 70. At the same time that gold and silver were showing big divergence, they were nowhere near their let alone their highs, even back to where they were in August of last year. So there's a big divergence there. And when you get a movement like that, we got this, I guess this is the 7th time since 1970 you've seen such a divergence. And what happens the month after the CRB becomes that overbought, then the precious metals look to do a catch-up. And so what we've seen is that silver and gold, the commitment of traders numbers in particular on silver, were really low as far as the speculative long positions and the short positions on the commercials as of about pretty much the last 4 to 6 weeks. And as we've come to life, as silver has broken out of its resistance line from the May high, we've seen a big pop here. And this is exactly what you'd look to see as you're getting your first wave of buying off the bottom. The speculator position is up just this week, reported on Friday, up 68% on the week, and the commercial short position's up 43%. That takes them from the extremes that we had seen in the previous, as I say, 4 to 6 weeks, puts them into neutral territory, and I think they've got quite a bit more to go. We could probably see another doubling of the net long position of the speculators, probably somewhere up around 60,000 contracts. The commercial should end up with a net short, maybe around 70,000, and they're nowhere near that right now. The other thing that's been happening is the gold-silver ratio in this last 2 weeks. As silver's come to life, the ratio has gone from 80 down to 74. So you're just getting this huge move in favor of silver. And what we would expect here is you get a first wave of buying, which I don't know if it finishes today or not, but this move, when it comes to fruition, we'd look for a pause and then a second wave. And it's that second wave of buying. We want to make sure that that holds its breakout. Because if we get what we call an upthrust failure, if it fails to hold the breakout, then we could see a pretty significant correction back down. And especially if we can't get above the major resistance levels here. Because if we don't, then that divergence against the CRB, which this month is putting in another new high for the move, if that divergence stays in place, that would then probably bring about a deeper correction in the precious metals. But for now, we're looking for this to be stepping up over the next number of weeks, and we'll look to see how it does on the pullbacks.
What's going on with the U.S. and Canadian dollars?
Canadian dollar is slowly grinding higher here now with the commodities, that being the gold and or the oil market, and not so much with the DBA. The agricultural commodities here in Canada, not quite as positive, but the Canadian is managing to hold its own. And on the U.S. dollar, it topped out around 94 on the index, and it's eased back here to the 93 and change level. Just been chattering around for the last month or so. I think it could give back a little bit more. There's some support underneath here, but for now, more of a trading range than anything else.
Ross, thank you so much for the update.
It was a pleasure to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at Charts by Ross. Coming up, Gerald Celente. Next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Gerald Celente, publisher of the Trends Journal. He's speaking to us from historic Kingston, New York. Gerald, it's great to have you back on This Week in Money.
Oh, thanks for having me.
Gerald, can you tell us about the latest issue of the Trends Journal and how many pages are in it?
This one was only 155. I think the week before was 166, and the week before that was 170 something, and no ads. And unlike the toilet paper record, or they call themselves the paper record, the New York Times, you know, they have these huge photos now. So you go to the business section, and I'm not exaggerating, over 2/3 of the front page are just a stupid photo of some stupid thing. So they're eating up space with photos because they're not giving you any reporting. So, you know, we're giving everything we have, no ads in the magazine. So it's all about the trends that are going on, what they mean, what's next, and what you might want to consider doing. And I humbly say, if anybody could show me a better magazine than the Trends Journal, please let me see it.
How can people subscribe?
I go to trendsjournal.com, trendsjournal.com. And again, it's the only magazine in the world where you'll read history before it happens.
What's your rant for the day?
Well, not a rant. What it is that who would have ever thought in just a little over a year and a half ago, you know, it all began on, you can't make this stuff up. Well, I guess if you're writing a science fiction movie, you can. It all began on January 2020, Chinese Lunar New Year, the year of the rat. And all of a sudden, ladies and gentlemen and children of all ages, the Yunnan province, the coronavirus broke out. And then the next week in our Trends Journal, the headline cover read, Coronavirus, 106 dead in China. And the next line was 1.4 billion still alive. You know, what are you telling me this for? By the way, as we speak, remember this is going on since January of 2020. How many people have died in China of the virus? Well, in America, you know, in the world, they keep throwing out these numbers, you know, like, my God, look what's going on. But in China, to date, you see here, the grand total of 4,663 people. That's it, under 5,000. The USA, 753,000. So, what happened? They closed down a couple of cities, and they locked down Hong Kong. I used to be on Hong Kong TV during 2019 when the protests were going on. Over 1 million people were taking to the streets in a city of 7.5 million. Can't get 1 million people out in America with 332 million. And I talked to the reporters on the, you know, off the air. So what are you guys doing? We're not going to stop, Mr. Celente. They're not going to stop us. Well, yes, they have. They locked down your city when the Yunnan, the virus broke out in the Yunnan city, and they closed down Hong Kong, passed a security law. Boop, it's over. And then what's the first thing that people did? Oh, the coronavirus is out. The coronavirus is out. So in a science fiction movie where the whole world changed, the first thing that the people did was run out and buy toilet paper. And I'm not making that up. So it shows you what a crap scene this whole thing is. And how lives have been destroyed. Hundreds and hundreds of millions of lives and livelihoods have been destroyed since they launched the COVID war. And it's only going to get much worse.
A number of people have been calling for a stock market crash. Your thoughts?
Yeah, well, the stock market should have crashed a long time ago. But again, when the COVID war broke out, you know, you could, you know, the facts are all there. What did they do? They lowered interest rates to near zero. And what have they been doing since? Pumping up all this monetary methadone into the system to keep artificially propping it up. And so it's an artificial market, has no relationship to reality. But hey, Celente, the numbers are coming out, and looks like the corporations are doing good. The financial numbers are good. Yep, you're right. They have no competition. So what you have is a monopoly out there. So yeah, earnings are going up, but for the big companies, but not for the average person. Life is going down, and it's going to keep going down. When the market's going to crash is very, very simple, and that's when they raise interest rates. And they're going to be raising them at some point. They have to, because inflation keeps going up. And again, you read the Trends Journal. We said inflation was going up now for almost over a year. And then you had the lying Federal Reserve saying that it's only temporary, and then it became transitory. And now they're saying that, well, it looks like it's going up, and looks like interest rates are going to go up as well.
How do stock markets and real estate markets act during periods of inflation or stagflation?
Well, this isn't stagflation. We're calling it dragflation, meaning stagflation means interest rates go up and the economy stays flat. This is dragflation. The economy is going to go down. And when the only reason this thing, again, has been pumped up is because of all the cheap money they pumped into it. And they're saying that the inflation's going up because of the supply chain disruptions. No, inflation's going up because of the tens of trillions of dollars pumped artificially into the economy by central banks. This is only a small part of it. So you're going to see housing prices drop. There's no question about it. But being that they went up so much, we don't see them going down that big. The big thing that's going to go down, as we see it, is commercial real estate. You're looking now at less than 40% office occupancy rate across the United States. What's going to happen when it goes back up? Well, maybe it'll go up to 80%. 80% doesn't make it. Hey, remember once upon a time they had things called trade shows and conventions? They aren't having them anymore, are they? And when they do come back, are they going to come back the way they did? So we're very concerned about commercial real estate sector. We think it's going to go down big and hard. On the home front, not as bad because you don't have the subprime mortgage fiasco that you had back in the 2000s.
We have inflation picking up and the price of gold remaining in a trading range. Could that be a signal of stagflation?
To us, gold is staying where it is because of the cryptocurrency markets. It should be much higher. And gold prices are going to go down when you see the interest rates go up. But then they're going to start going up very sharply, we forecast. Why? Because the economy is going to go down big time when interest rates go up. Equities are going to crash like we've never seen before, and gold and silver to us are the safe haven assets. Again, you're looking at trillions of dollars going into cryptocurrency markets that never existed, 10, 12 years ago. And that's taking away from gold and silver.
Silver's also in a trading range. What do you see ahead for it?
Again, the same thing as gold. It's going to break out when inflation keeps going up and the equity markets really, really go down big time. Because again, the money going into the crypto markets in the old days would have gone into gold and silver. But it's not going there.
Crude's been on the move. What do you see ahead for oil?
Well, I think oil's in the range where it's going to be staying, but it's still, much higher than it was. So it's near a 7-year high. And this is going to hurt the average consumer that's really being hurt by inflation as wages don't come near going where inflation numbers are going. And we're also going to look at, you're looking in California, the average price of gasoline for regular gasoline is like over $4.50 a gallon. So it's going to be, it's going to take a big hit, and particularly also the natural gas prices. In Europe, they're at 13-year highs. So the people can't afford to buy more if they're earning less. And again, it's all about inflation. You're even hearing now the Fed chairman Powell admitting that inflation's going up much higher than they had anticipated. But again, they said it was temporary, then they went into transitory, and now that Powell, just this past week, said that inflationary pressure, quote, are likely to last longer than previously expected, likely into next year, end quote. As inflation goes up, interest rates go up, markets go down, both in housing and equities.
What do you think's the safest place or safer place to store wealth? The U.S. dollar, gold, silver, or cryptos?
I would say, only speaking for myself, gold, silver, and cryptos.
Could interest rates surprise going forward?
No, they're not going to surprise. They're going to go up. They're raising them around the world. Except Turkey. Turkey's lowering them, and you're seeing their inflation skyrocket, and the lira has hit an all-time low. Another all-time low after another all-time low after another all-time low. So they're the only ones doing it, and you're seeing what's going on with their currency. And the inflation rate, the unofficial inflation rate in Turkey is 40%. The official is 20%.
Why have home prices spiked during a pandemic, and could this trend be in for a change?
They spiked because people are leaving the big cities and they're going to other areas. Where I am up in Kingston, New York, you're looking at 18% price increase of houses people are getting out of New York City. Read the Trends Journal. Go back to March 2020. And what did I forecast? When people lose everything and have nothing left to lose, they lose it. You're going to see spikes in crime, violence. Look, what did Walmart just closed 5 stores in San Francisco? I left my heart in San Francisco. I'm getting out of San Francisco. Target just closed a store in San Francisco because of shoplifting. The same reason for Walgreens closing down. So people are moving out of the city. You go to New York City, you want to see a freak scene? Oh, and by the way, the homeless numbers, off the charts. And now this is important that no one speaks about. If the virus is so deadly, why aren't all these homeless people dying?
Are we likely to see extreme market distortions where a lot of money could be made or lost?
Oh, absolutely. The bigs will make big money on the market as the markets crash. They're going to be doing it. And by the way, with all these exchange-traded funds and the gambling and the cryptos, that could bring the price down big time, too, just to make that clear. Because if you get some really, billionaires start shorting the market or longing the market, either way, it's going to be very volatile. So the bigs will always make money. Look what happened. They were too big to fail. The banksters were too big to fail. The Federal Reserve dumped in $29 trillion. Look what's going on. The Federal Reserve banksters, Powell, Rosengren, Kaplan, doing dirty dealing behind knowing what they're going to be saying, and then they play the markets. So, the whole game is rigged.
How important are trade deficits to the stability and prosperity of countries?
Well, once upon a time, they used to be very important, but nobody seems to care anymore. I mean, look at the United States' trade deficit, and look at, it keeps going up against China, and the people are worried about China, and again, they have a dual circulation policy. They're building the economy internally, and they're also building it externally. Not the other nations. They have a supply chain disruption. How come? You mean you can't? Once upon a time, of where I am up not far from me, Syracuse, New York, they used to make great, and Corningware up. All these places used to make all these beautiful dishes and everything else. West Virginia, no more. They'll buy from China. You didn't have supply chain disruptions. So they're self-sustaining economies, and we don't have that.
What are you hearing about Canada?
Canada's going to go the way of, the United States, Australia, and not great. It's going to be another down trip for them. And again, all these restrictions. I'm supposed to be in Vancouver as a keynote speaker in January. I can't go because I don't have a vaccine passport. And so this is going to hurt a lot of people. You're going to see at least 30% of the population not being vaccinated, and they're going to be banned from going to different places. And business is rough even in good times. So in bad times, it's going to get a lot worse. So Canada's going to go where the United States, Australia, Europe is going to go. And it's going to go down.
Could Evergrande be the canary in the coal mine for China's economy?
I don't think so. look, the Chinese housing market has been way overbuilt, and nobody talks about. There's never been a real estate market that's taken off like that one has. You go back to the 90s. You go to Shanghai, people are living in huts. This thing has boomed. So yeah, they got a debt to GDP ratio of over 270. And the thing has been artificially, blown up. But the Chinese government is in control of the economy. And they're going to do everything they can to make sure the economy doesn't crash.
The Trends Journal was bang on when it predicted Russia would invade the Crimea. Is China going to invade Taiwan?
No, we didn't say Russia was going to invade Crimea. What we said was that Crimea was going to exit from Ukraine. And they had an election, and over 96% of the people in Crimea said, we don't want to be any part of you. China's going to take over Taiwan, and nobody's going to stop them. Look, the Americans couldn't win a war of 80,000 soldiers in Afghanistan. They're going to beat, several million, a couple of million Chinese. No way. No, China's going to take over Taiwan, and nobody's going to stop them from doing it, just like they took over Hong Kong.
What's the latest on the push for Agenda 2030, the Great Reset, where apparently you'll own nothing and be happy about it?
Well, you're going to own nothing and be unhappy. If you like living in a communist, fascist world, that's where we're going. And again, the bigs have taken, we have one of the columns each week in the Trends Journal, bigs getting bigger. And we keep putting in all the buyouts, all the merger and acquisition activity, on and on and on. And you have, whoever heard of a Blackstone, a BlackRock, Carlyle Group, all these hedge funds, private equity groups, they didn't exist when I was a young guy. So the bigs are taking over everything, and all the people are going to be our plantation workers on the global plantation of Slavelandia. And that's the end of the story, and they'll keep throwing out pennies and dimes to keep the people happy.
We've heard that the contents of the jabs will allow people to be connected or controlled by 5G. Is this about transhumanism, zombies, or is it just science fiction?
The whole thing I said, though, in the beginning, it's a science fiction movie. You can't make this stuff up. And, they're putting 5G towers everywhere. We write about the deadliness of them. Look, we had a story in the Trends Journal, an article, going back a few months ago. Anybody could look it up. University of California, Berkeley. And they have a study out that if you're on a cell phone for 17 minutes a day, your chances of getting brain cancer only increase by 60%. Isn't that great?
More and more people are leaving their jobs instead of getting the jabs. Could this affect the economy, stock markets, and real estate?
Absolutely it is. And you already have job shortages as it is. And this is going to make bad situations very worse. We're going to start seeing strong political movements overthrowing the crime syndicates that are in place now. No vax, anti-establishment, anti-vax, anti-immigration, anti-tax parties.
Could Southwest Airlines be the canary in the coal mine for freedom?
Well, not the canary in the coal mine, but it's showing what's going on. And look how they're hurting. Look at their profits. No, there's going to be a lot of people who are going to say, no, I'm not going to do it. And I'm one of them. I'm not going to do it. Nobody's going to force me to do it. The hypocrisy of Planned Parenthood. They have the slogan, my body, my choice. Fine. That's great. That's what you believe. You're entitled to believe what you want to believe. But why are you spending millions of dollars promoting the vaccine, you hypocrites? It's not my body, my choice anymore? That shows you what's going on.
Your thoughts on the jab passports?
Well, again, it's going to hurt business. And it's going to no jab, no job, no school, no travel. Again, I can't go to Vancouver. And because I refuse to get and by the way, I know enough people, I could have gotten a phony one, and a legitimate phony one. And I refuse to do it. I said, no, I won't do that. I'd be a hypocrite. And a lot of people are doing that. They're getting fake ones. But still, it's going to hurt. Look, at the best of times, business is tough. And this is going to make bad situations worse.
Could the people believing the pandemic narrative be victims of mass psychosis?
Let me tell you about a thing called the Afghan War when 88% of Americans believed it. How about World War I? I'm a Yankee Doodle dandy. It never stops. Maybe your favorite war was the Peloponnesian War. No, I like the 100-Year War. Well, I like the War of Roses. People are followers. My father, may rest in peace, used to say to me when I get upset about something, son, say, take it easy. People have little minds. But it does not take a majority to prevail, but rather an irate, tireless minority, keen on setting brush fires of freedom in the minds of men, said Samuel Adams. And that's what we see what's going to happen. That tireless minority is going to really start rebelling.
Are we in a herd thinning event?
I don't know. But, again, this is a gene therapy shot, Operation Warp Speed, that's never been injected into human beings before. All you women, why don't you take more of that estrogen that they were selling all those years? Nah, thalidomide, I like that one. There's not been long-term tests on this. This is brand new. Operation Warp Speed. I'm not making that up.
Do you think the world can be saved?
Again, it's up to that tireless minority, keen on setting brush fires of freedom in the minds of men. But we have to unite under one umbrella, and I'm trying to do that. I created the Universal Church of Freedom, Peace, and Justice. You could go to freedompeacejustice.com. And we are also offering religious vaccination exemptions.
Do you think we're in for tougher times ahead, and are there things people can do to survive and prosper?
We're in definitely tougher times ahead. The economy's going to go down big time. And get in the best shape you can, physically, emotionally, and spiritually. Think for yourself. That's the big one. But you got to get into shape, and every way you can, because you're in the fight of your life.
So far, who are the most interesting people you've met?
Well, the person I admire the most in the whole political field is Ron Paul. Not Rand, but the father Ron. And I was just a speaker at his War on Us event in Washington, D.C. back in September. And that's the man that and Judge Napolitano, Fox, we're doing podcasts with him once a week. And there are a number of Dr. Paul Craig Roberts, a real man, RFK Jr., Dr. Mercola. These are people I really respect.
What are the latest trends you're watching?
There's not, it's a magazine full.
What's the latest with Occupy Peace?
Well, right now we're putting more of our focus into the church, because we have to bring people under one umbrella of freedom, peace, and justice. So Occupy Peace, we're still doing that very much so, and having rallies, but we're also now building the church to bring people from all over the world under one umbrella, because united we stand, divided we fall. So we're trying to unite everyone that believes in freedom, peace, and justice.
How can people subscribe to the Trends Journal?
Trendsjournal.com, trendsjournal.com.
Gerald, thank you so much for being on This Week in Money.
And thank you so much for having me on, and keep doing what you're doing, the great job that you're doing.
My guest has been Gerald Celente, publisher of the Trends Journal, online at trendsjournal.com. He was speaking to us from historic Kingston, New York. Coming up, Eric Hadik, next on This Week in Money.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Eric Hadik, CEO and President of InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, thanks for having me back, Jim.
Eric, Bitcoin setting record highs during the week. The security officials approving Bitcoin ETF. Is this thing just going to keep climbing, or is there a cycle that controls Bitcoin, just like it seems to, there seem to be cycles and everything else in the markets?
Yeah, I think there's a couple of headwinds that Bitcoin's probably going to be running into now. One certainly is some intermediate cycles. I was looking at the weeks surrounding mid-October for an important peak, so we're right into there. Another headwind is price objectives and patterns when Bitcoin pulled back, all the way to into late last year, early this year. Its monthly trend pattern showed, actually it was after the initial surge into March and then pullback, it showed that it needed to go back up and set new highs above that 67,000 level. And then in late September, the weekly trend showed the same thing. It did a correction where it does not reverse the trend down, so it shows you that that is a normal correction in a larger uptrend, and that too projected a rally up to 67,000. And on a monthly basis, there's an extreme number that's calculated each month based on previous highs and lows. And for the month of October, that level came in around 69,500 in the December futures. And Bitcoin just attacked that level, just got within in 0.5% or so of that. So a lot of upside price objectives are being met at the same time these intermediate cycles are peaking. But you just mentioned, kind of from a anecdotal perspective, you mentioned one of the key things that could certainly usher in an intermediate top, and I was discussing this in a previous alert of mine, and it's a variation of the old adage, buy the rumor, sell the fact. I just called it buy the rumor, sell the launch. And that launch that you mentioned of the first U.S. ETF, it's been anticipated. It's been, that's been part of what has been driving the price up in the last few weeks. I mean, basically, Bitcoin has gone up about 60 to 70% just since its late September low. And part of that is anticipation of this impending launch. And that's something where all of a sudden that's going to make Bitcoin speculation available to an even wider swath of the population because it's more affordable when you're trading in that way. And so very often you get a market running up. All of the savvy investors, have been long leading into that. And then there's not much more to drive it higher at that point. So that's when they start taking their profits, even as the novices run into the market and say, oh, Bitcoin's, going up to $500,000, so I got to jump in right here. And that's what usually makes a top. So it wouldn't surprise me at all to see a peak that can hold for at least a couple months, and it might be something longer term than that. The action of the next few weeks should kind of clarify that. But seeing a top just below or right around 70,000, and then see Bitcoin go into more of a corrective consolidation mode.
Commodities, of course, we're looking at all kinds of shortages around the world, and that's helping drive commodity prices higher. What do you see on the general commodity front, and then we'll look at individual ones?
Well, I think that if you take them all as a whole, there's been some of the commodities, like, for instance, lumber, which already went through their entire inflationary bubble, going from about $300 a board foot up to $1,700 a board foot, and then correcting all the way back down to $450, $500. So even as that's going down, you have other commodities that have been edging higher. There have been a few that have seen some accelerated moves up in the last couple months, but for the most part, you really saw an overall commodity culmination around the middle of this year. But I do think that there is another wave up leading into second or third quarter of 2022. Doesn't mean it's going to happen all at once, but from a longer term perspective, I think there is still more upside in that trend, just not as extreme or as accelerated as we saw really since the March, April 2020 lows in everything, lows in commodity, lows in stocks, unheard of low in oil, at negative $30 a barrel for the front contract back then. There was just such an extreme to the downside that then that ricochet to the upside overshoots as well, and that's what I think you saw going into the middle of this year. And now you're kind of balancing that out. Some of those markets are seeking a bit of an equilibrium. But there are a couple commodities that I think have some potential for some good moves up over the next couple months, even as a lot of them are plateauing.
Crude has been unexpectedly high going late into the fall. Is that a trend that's going to continue?
I'm thinking that trend is also very near a peak. From a timing perspective, excuse me, I was looking for this last leg to run up into the first half of October. We've obviously overshot that a little bit. But from a price perspective, crude has done what I've described before in some other markets and what seems to be a very consistent pattern in a lot of markets, and that is range trading. And when I use that term, it's pretty self-explanatory, but it's a market that will trade in a particular range, vacillate between highs and lows within that range, and then when it finally breaks out of it, it will often move about the same increment or the same interval as that range was, and then trade in a new range of that same interval. So specifically when I'm talking about crude, it has seen this pattern on an approximate $11 range, and goes back to the lows that we saw in late 2020, right around $39 a barrel, and from there it rallied up to $50 a barrel. Then it saw some consolidation. Once it broke above 50, it shot right up to about $61 a barrel, and not surprisingly, when it corrected back in July and August, it came right back down to that $61. So those ranges, they can become support or resistance depending on which direction the market's heading and what it just broke out above or below. So in between that March peak at 61, the market consolidated for a while, then when it broke out, went right up to 72, then back down to 61. So you could see that 39 to 50 to 61 to 72 are these $11 ranges that help pinpoint some of the critical highs and lows and some of the trading ranges. So when crude went back up to 72 in mid-September, then broke above it, your next range target is around $83 a barrel, which is where we have just hit now. And there's other price objectives that are coming into play around the $83 to $85 a barrel. So it certainly has stretched to an extreme. And the other thing that I talk about with the energy markets is the very common correlation between energy and equity markets, and that a lot of their turning points, a lot of their moves are often in sync. I did several reports on this back in October of 2018 when all of my work was looking for a sharp sell-off in both energy markets and equity markets, and have discussed that periodically since then, and you've seen it at many of the key turning points. And right now I'm looking for both the equity markets and the energy markets to peak here in the weeks surrounding mid-October, and then see at least a 3 to 5 week correction that could be pretty noteworthy.
Does natural gas also have a cycle, or is it too small of a trading thing to see a cycle in?
Oh no, it absolutely has very consistent cycles, both on intermediate and longer term. In my monthly newsletter for a year and a half now, I have been just reiterating the longer-term cycles that had me expecting a major bottom in the first quarter of 2020 and an initial bull market into the first quarter of 2022 with a couple of intervening highs and lows in there, which natural gas adhered to very closely. And so it has really been fulfilling that both cycle and wave outlook, and I think there is another leg up leading into the first quarter of next year. But in the meantime, I've been looking for a pullback to at least $4.90 and possibly as low as $4 on the December futures is what I'm looking at in the coming weeks. So I think that we're in a corrective mode, transitioning from the some of the high heat that created demands in natural gas, and going into the winter months where if these cycles and if my analysis are accurate, it might be saying that the early part of next year has a unusual cold spike, or it may just be that the continued demand for natural gas, based on a lot of other factors, is what drives another leg up. But I am looking for another advance after we've finished this correction and a more significant peak in the first quarter of 2022.
What's going on with the U.S. dollar?
I think it is in the early stages of a new bull market. Multi-year cycles bottomed in the early part of this year, 2021, and the dollar index has been building a base and slowly building some upside momentum from there. Most recently, it was interesting to me, and I guess it would be a little bit on the terms of that range trading that I just mentioned, but on a much higher basis, higher magnitude basis, that the dollar index had some key highs and lows over the last several years right around 94.50. And so that becomes a multi-year equilibrium point, a balance point, swing point, whatever you want to call it. And the dollar just rallied up to there. And from there, I thought and still think we'll see a correction back down to around 92.80, maybe as low as 92.50. But then, if we can bottom there and start heading higher, which is what I expect, potentially back up to the peaks we saw in 2017 and 2020, up around 103 on the dollar index.
What's happening with interest rates?
Interest rates are continuing to follow the multi-year outlook. I know I've discussed it with you multiple times, so it's probably a good quick review that bonds and notes, which trade inversely to interest rate, had and still continue to have a very consistent 4-year cycle dating back to the 1980s and 1990s. And the last couple phases of that cycle saw important peaks in bonds and notes, so corresponding lows in interest rates, in July 2012, July 2016. That and a lot of other things had me looking for a major top in bonds in July of 2020. We saw that took hold. We've now seen a couple of significant sell-offs in bonds or upticks in interest rates. And I think that those trends are going to continue into 2022, the latter part of the year, possibly even stretching into 2023. But it's not all at once. We've just come into some critical support and some intermediate cycles on October 20th to the 25th, where I think we could see a low in bonds and a rally from there, which would have interest rates ticking back down a little bit. But on the whole, I think that interest rates are going to continue to edge higher over the next year and a half.
Gold, what's going on there?
Gold has been recovering, and I think that if you do see what I'm talking about, as far as an intermediate bottom in bonds and any sort of bounce there, that could really help gold on a near-term basis, because even though it's been rebounding, it's been weighed down by that threat of higher interest rates. And if you take that burden off of gold and silver, you could see it have a little pop here in the second half of October. But it bottomed in late September along with not only some very consistent weekly cycles, there's this approximate 30-week cycle that has governed gold shares, both the XAU and the HUI indexes, and that was calling for a multi-month bottom in late September and an initial rally into late October, early November. But in the Gold Bugs Index, the HUI index, that also had a very consistent 3-year cycle that went from timing a high in September 2012 and then inverted, timed a low in September 2015, then a low in September 2018, and I was looking for a low in September 2021. We got that as well. So there was a convergence of a lot of very important cycles coming into play in late September. So that's going to be a decisive point and time for metals if they head back down to those lows later in the fourth quarter. That's going to be the real pivotal point for them, whether they can hold that or not. But for right now, I'm looking for gold and silver to still have some more upside in the short term.
I know we like to also mention Geo-Cosmic events. We had very strong solar winds last week with spectacular northern lights as far south as Vancouver. Earthquakes in Haiti and Bali, the volcano on the Canary Islands spewing away something fierce. Are we in a peak cycle for those kind of things?
I believe so, and I talked about this first from a kind of warning standpoint in my monthly newsletter throughout 2019, explaining how multiple factors, but one of the key ones being the sunspot cycle, but multiple factors I thought would start to increase the frequency and intensity of sunspots, of earthquakes, and of volcanoes starting in 2020, 2021, but intensifying in 2022 through 2024. And there's a lot of correlations that it would take me far too long to explain here in detail, but you certainly, I look for the kind of swarms of those events. When you talk about earthquakes, there's significant earthquakes around the world practically every week. There are volcanoes erupting on a pretty consistent basis around the globe. But for me, it's identifying those time frames throughout history when there's an unusual intensification and swarm of many major earthquakes, major volcanoes, all in a more narrow window of time. And so when I talk about looking for increase in those type of events, I'm talking about a significant convergence of those events. And I've shown where in my work and my analysis that the sunspot cycle does have a very consistent correlation to earthquakes, and there's a lot of reasons why that could and should be the case, but there are some other broader cycles that all happen to be coming together in this same time frame that give me the type of synergy of cycles that I look for to have a bit higher confidence level in discussing things like that. And so yes, I do think that we're going to see that, and I do think that the solar storm, sunspot, and geomagnetic storms that we often hear about, I think they're going to become a little more of a concern in the next year or two. And I even show frequency of cycles, and I'd be happy to send out my recent monthly newsletter to your listeners that updates some of this, but that you have had these major geomagnetic storms very consistent with the sunspot cycle. And what most people don't realize is that even 11 years ago, when this sunspot cycle averages about 11.2 years between peaks and between troughs in the amount of solar storms and sunspots, but back in 2012, you had a solar storm that they believe was the size or would have been the effect of the 1857 Carrington event, which anytime someone talks about solar storms and the impact on Earth, that's the one that they go back to and compare things to. But we had a storm that was just as big and significant, and I guess that the blast that it sent out was just as powerful. But fortunately for Earth, the sun's rotation, the Earth's orbit, managed to miss that by about 8 or 9 days. And so had it happened 8 or 9 days earlier, I believe, we could have been in for a very serious event. And all you have to do is go back and look at some other events we had in the early 2000s, and then, of course, in Canada, they're probably still remember in 1989 in Quebec, the storm that knocked out a chunk of the power grid, and even then, they said it was only a couple of buffering or intervening power stations between there and the U.S., and the entire east coast of the U.S. could have gone down had these few intervening stations not held up the way they hope them to. So there's those type of storms going off on a very regular basis, about an 11, 12-year basis, and the only question is whether they land a direct hit or not on Earth. And I've detailed some of the consistency of the broader kind of the swarms of these cycles on a longer term basis, and why I think that in 2023, give or take a year, we could see one of those type of storms hit Earth, and the only question would be how intense or how extreme the consequences of that are.
Do we have protections, giant breakers to make sure the power grid doesn't collect that energy from the solar flare and just blow up?
Well, that type of stuff is above my pay grade. I know that there's a lot of things that they hope are in place to do that, but each time they get a new challenge like this, it also reveals some weaknesses and some oversights that they just couldn't imagine or plan for. So again, it really comes down to how many of those those breakers hold or don't hold.
And of course, just for the average homeowner, you really should have a built-in surge protector that an electrician can install for a few $100s. Otherwise, a lightning strike or even one nearby can blow out all of your electronics, and think how expensive it would be to replace that big flat screen TV or even just your fridge and dryer.
Yeah. The issue is if we got something that was that strong and that extreme, there would be a whole lot of things to contend with. Like even being able to gas up your car or a lot of things. And I'm not looking to get into a Chicken Little mentality or anything like that. With all of these types of things, I want to analyze them. I want to discuss them in as objective and rational of a mindset as possible. And when cycles do increase the possibilities, take whatever precautions might be necessary, and just continue to live life however that evolves. But it's certainly not a head to the hills type of mentality. So I do think it's something, like you said, that there are some things that people could do for very modest investments that would help protect them against some very regular cyclical events that happen in our world.
And, of course, the Carrington event in 1859 September, the only electronics really happening in the world way back then were telegraph lines, and they were fried. And some operators said the little clicker thing that they used to send the messages were actually welded shut, and power lines exploded and so on. And that was a non-electrified world, just imagine now, where even our money is electric. If we all use our debit and credit cards, now we have cryptocurrencies that are even more electronic. That's why I know experts say you should have, at least $200 cash around the house just in case there is a major power outage.
Yeah, as long as all the places you go to still take cash by then.
Yeah, and a lot don't. Eric, so overall for the markets, are they going to remain bullish, the stock markets?
I am looking for the stock market to see a corrective period from late October into late November, maybe early December. Depending on the magnitude of that correction, I think that some of the indexes, some of stocks could head to new highs into the first quarter of 2022. But I think at that point, you're going to start getting into a more precarious time frame for stocks, and that in the ensuing 6 to 12 months, might even stretch out longer than that, you could see wider swings as opposed to just a straight uptrend. I mean, really, the move since late March of 2020 has been just extraordinary in its scope and its consistency. Even the corrections since then have been very limited. So the stock market is certainly due for some consolidation on a broader scale. And if you do continue to see interest rates edge up and some of these other inflationary markers see another wave up next year, they're all the types of things that could begin to weigh on stocks, even if that's just to prevent stocks from seeing another all-out bull market and instead see a period of, like I said, wider swings, significant sell-off followed by some, sharp rallies as we always get, but a different type of trading than what we've seen since March of 2020.
Now we hear the Fed is talking about tapering all their quantitative easing. Is that a factor in these cycles?
Well, certainly. That's more of a reinforcing or corroborating factor, and that's the thing that I often say about cycles and technical analysis, is that one of the key things in both of them is timing, and if you've interpreted them right, what you will often see is the technicals give and the cycles give indication of a move early on, and then usually about a third of the way into a trend, the fundamentals will start to kick in. And that's a reinforcing factor that kind of corroborates that what you're looking for is pretty accurate. And so some of this discussion from the Fed is perfectly timed as far as interest rate cycles are concerned, and stock market cycles. So it's more of a reinforcing factor than anything.
Eric, thank you so much for being on This Week in Money.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and president of InsideTrackTrading.com. He was speaking to us from the Chicago area. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Gerald Celente, Eric Hadik, and thank you for listening. If you have any questions for the show or any of our guests, you can send them to info@howstreet.com. Now stand by for a company showcase update from American Manganese CEO Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to Company Showcase, Larry.
Well, thank you, Jim.
Larry, another very busy week in your office. 2 news releases. Can you tell us about them?
Well, we had a release on October the 20th regarding our Recyclico demonstration plant update, and I think people have been waiting for that. Actually, the stock went up on that release. We had a nice schematic of the new demonstration plant included in the release, and it was just kind of an update to where we're at, what we hope to achieve, and moving forward from that. But it's the demonstration plant, I think we're all looking forward to it, including Cometco. And, we're still waiting for a few parts that are 75% paid for, and the balance will be paid when they're received. And these are what we call long lead items that have to be fabricated. So, that was well received. And this morning we had another release out, which Dr. Hildebrand, who's a lawyer, he was on the board of AMY back in 2007 to 13, and he's now back on the board, and he specializes and was one of the top lawyers in Canada on litigation. And it always seems like, Jim, that when you start to get something that's got value to it, and somebody wants to take it away from you, and they do it through various mythologies, but it's certainly if they come and try to blindside us, Paul's quite aware of how to litigate that sort of a thing. But that's not the only thing he has. He's a valuable contributor to the board. He's active in the company, and he will attend meetings that are of specific interest to the company, or Zoom meetings if required. And so I'm happy to have him aboard. Paul's been has worked for my various companies over the years, and since about the mid '80s, and and we've had nothing but success when we were litigating a couple of situations with a couple of companies I had, and we came out on top on that. And so I've always wanted him to be a director, and he was in the initial periods. He was involved in some of our discussions. So, that's enough about the 2 news releases. You can read those. They're attached to this podcast. And I would like to move on now to what's happening out there in the market. And it certainly looks like the regulators in various countries are looking at tightening up the recycling rules and trying to keep everything out of the environment. And we've been working in that direction for the last 4 years. We wanted to deliver a product at the end of the day that had nothing goes back into the environment or into the atmosphere. So that's one of our goals in life, and I'm glad to see some regulation coming in around that. And there's been lots of good news out there on recycling. It's starting to hit the main topics, and we just want to be a part of that. I got a lot of people asking, "Oh, gee, is somebody ahead of you there? Is somebody ahead of you there?" We run down a lot of rabbit holes, but we can't prove or disprove what they say because they have nothing out there in the public domain. So it's a difficult question to ask. We don't like to bum rap anybody, but the truth of the matter is we're very confident and very solid with our own recycling work, and that's our main goal, because this is not going to be a small market of $2 or $3 billion. In 10 years from now, it'll probably be in the multi-billions, and, because they're talking about putting in a lot of new battery manufacturers, gigafactories for that matter. And so we just want to be a part of that equation. At the end of the day, I don't think we'll be the only recycler out there, but we may be the biggest licensee, or we may be the biggest out of the group. I don't know. I mean, that's forecasting ahead of my abilities, and it's even today I can't forecast a timeline. I was one of the first companies to do a timeline back about 15 years ago, and we stuck by that timeline. We didn't have these outside influences that influence the timeline, usually negatively. So, but just to say that we're on track, we should have the plant up and going, the demonstration plant, so that we can move on to designing and estimating the costs and profits that we could derive from our own recycling commercial plants. So, and then we can build that. It's I know a lot of companies are doing black mass deals. From everybody that we've talked to, and there's absolutely it seems like it's a money losing proposition, and it's you got to get the metallurgy down. You have to be able to recover those cathodes, and in order to make the company profitable. If the company's not profitable, it won't survive, it won't sustain. So these are our goals, and I think anybody that follows us diligently sees that we put everything out there. It's not that we're putting fluff out there that you might read on some of the boards, but I don't have to talk about short trading, because anybody that can see what happens when the short traders are heavily involved in your stock, and we've traded 76 million shares in the last 3 weeks. 3 weeks, and so, Jim, it's been a hectic week. I don't like to see the stock price down here. I know a lot of people are buying the dips, and I think that's a smart move. So, the other thing is that the directors have a lock-in period where they can't sell any stock for 90 days. Just to let everybody know, it's no directors are selling, their officers are selling their stock. It's, you might be able to exercise a warrant or an option, but you can't sell it. And, so that's kind of where we sit today. We've got some interesting attachments, and the news releases will be attached to this. So I think that's just about ends my podcast right now.
Larry, for people new to American Manganese, what's the company all about?
American Manganese is a critical metals company who's focusing on the recycling of lithium-ion batteries, and or specifically the scrap, which is the low-hanging fruit, that becomes available at a rate of about 10% every day. And if you can get the squeal out of the pig on that, I think that you can pretty much corner most of that market. So that's our ambitions, and this whole recycling opportunity was derived from our patented process for low grades of manganese in the U.S., where we're working on the strategic stockpile for the DLA. And so we got 2 projects on the go. One was just completed for the DLA. I do believe that, at least it's my strong belief that we'll continue doing work for them, and but I can't say anything definitely until we get the them signing on the contract. Now, the company is traded on the Toronto Venture Exchange under the symbol AMY. It's traded in the U.S. QB board under the symbol AMYZF, and it's traded in Frankfurt under the symbol 2AM. You can find all the information you want on our website, AmericanManganeseInc.com. You can actually phone the company at 778-574-4444. You can email me at LREAUGH@AMYMN.com. And I wish everybody a great weekend.
Larry, thank you so much for the update.
You're welcome, Jim.
We've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on October 22nd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.